Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, a wild day in the markets. We're going to be looking at SPY, QQQ to get a grip on the tech sector, IWM, the VIX, and that's that. So we'll look at SPY here to start it off. So SPY had the clear bear break in the video over the weekend. We highlighted the 4-hour pattern, the tightening equilibrium pattern with our low, high of the bounce, higher low. Looked like the lower high was being set Friday, followed through and just fell right through support in just a free fall today. And the bulls are attempting to bounce here at the end of the day. Looking at the hourly time frame, it's still a weak bounce at this point, and we're going to have to form an hourly higher low and higher high for the bounce to have any kind of follow through. Because this bounce is coming right off of the low, it's looking like it could just potentially be cooling off the RSI for another leg down. So we have to take tomorrow with a fresh, clean slate. We could absolutely see continuation down because the RSI is being cooled off by this end of the day bounce that we saw. And we'll be watching close for a bullish reversal candlestick to try and hold this 200-day moving average, which held today. That's the only support left, aside from this 200-day moving average, is the low of the February dump. 251.91 is that level, adjusted for the dividend distribution, and that's a very important level, because if it breaks, it will change the weekly momentum to lower highs and lower lows. SPY on the weekly time frame. So here's our high, low, lower high, and a potential lower low if we break that February low. It's certainly looking like we are going to break it. It's just a question of, do we break it this week? Do we break it in 3 weeks? Obviously, no one knows the answer to that question, but that's what we're keeping an eye out for. And in order for the bulls on the weekly time frame to turn things around, it's not happening anytime soon. And just looking at the daily chart on SPY, we have lower highs for the last few weeks. Every single bounce attempt is just a lower high. So the most recent lower high is 265.26. Any bounce attempt under 265.26 maintains the daily lower high pattern, keeping those bears in full control. So QQQ and the tech sector, if you've been watching our channel for weeks or months at this point, you heard me say plenty of times that in order for this market to see any real weakness, we have to see weakness in the tech sector. And if the high flyers are staying strong, and I'm talking about Facebook, Amazon, Netflix, if they're staying strong, then we're not going to see this market pull back very much. We saw Facebook take a hit due to bearish news and data and all that. We saw Amazon take a hit now because Trump's going after him with tweets. So one by one, these major tech names are taking a hit, and it is allowing the weakness to creep back into the market. So here on QQQ, it's a very similar setup to SPY. 149.88 is the low of the February dump. We're still above that level. Still very clear lower highs on the daily time frame, the most recent being 161.71. And we're looking at the 200-day moving average, which support will come before the low of the February dump. Weekly time frame is a different setup here. Because we went to a higher high on the weekly time frame, that gives the bulls more time before we go bearish on the weekly. And what I mean by that is, even if we dump to the low and break the low of February, we still haven't set a lower high yet. We will anticipate a lower high once we do bounce to form, but it's different than SPY, which would be a lower high and a lower low. QQQ breaking would not be a lower high and lower low. It would just be an all-time high and then a loss of the higher low pattern. So the bear pattern would be a bit more developed on SPY than it is currently on QQQ. IWM, just breaking the low of March. It is the strongest market that we've been looking at. Also at the 200-day moving average support, but not close to breaking its low of February, 142.17. We're still about 4% above that level right now, a little bit more than that. So we have plenty of wiggle room before we would come down to that point and see that clear break. And the last dump in February held the 200-day moving average support multiple times, and here the bulls are trying to hold it again. Same thing with lower highs still clearly intact. Anything under 153.10 is a lower high on this daily time frame. So the bears have complete control. The bulls are going to try and bounce and see an hourly higher low and higher high as signal number one that a daily bullish reversal candlestick might be forming. But we cannot give the bulls any benefit of the doubt. The bears have a lot of momentum behind it, and the bulls have to prove their strength to us, and they have to prove volume behind their bounce attempt. Here's IWM on the weekly, our all-time high, low of the pullback, lower high, and still a higher low very easily. And we could be in an equilibrium pattern here on this weekly time frame for another couple months, really, another month plus with how it's currently standing. If the market does bounce and hold the February lows, we're going to be right back in the middle of this equilibrium pattern without too much effort by the bulls. VIX on the daily time frame. So VIX was directly inverse to the S&P 500. Right now, we'd be trading in the low 30s. And I can say that because I can look at the price action and say, okay, back on March 23rd, we're still below that level, and we're still below March 2nd. And I look at SPY and say, where are we compared to those levels? And we're way below them. So if it were directly inverse, VIX would be significantly stronger, which is why oftentimes, if I'm trading with SPY, sometimes people like to say, oh, if SPY is weak, I'm going to trade VIX and then, just watch SPY for my entry and exit. But it doesn't always stay that way in terms of the correlation. That correlation can vary way more than if you were just going to be playing, SPXS or SPXL, which are ETFs, which are directly correlated to SPY. So just want to point out that there are some differences there. And where we stand right now, we still have daily lower highs. 2622, 2601, 2572 is the high of today. We've rejected from the daily upper Bollinger Band resistance 4 out of the last 5 days. The bulls must break 2601 and 2622 to see a bull break of these daily lower highs. We have our higher low being set here at 1960. Now we need a break of 2622 for a convincing follow through for these bulls. The weekly time frame already got a bull break of last week's inside bar. That's a great start to the week. Need to drive it home and break that lower high pattern. Looking at gold, want to point out that gold is not seeing the kind of volume that I would be anticipating and the kind of price action. It's a bullish weekly chart, but right now gold, where we stand currently, is at a price lower than mid-February, lower than late January, lower than September, and also lower than July. And if we go back and look at any of those points, SPY is easily a lot, comparative to, I just confused myself. The point I'm trying to make is I would be expecting gold to have much stronger reaction here to the SPY weakness. So gold saw a nice bullish day today, no doubt about that. But in terms of last week's bull move, we're not even testing that resistance right now. So again, same thing as I just said on VIX. If it were a directly inverse relationship, we would be expecting gold to be a lot stronger right now. So I'm not seeing, there is definitely money going into precious metals, but it's not to the magnitude that I would be anticipating. And so that has us looking around and saying, where's the money going? I was looking at REITs and some ETFs for REITs, and they're not really seeing much favor right now. So keeping an eye out for if this market continues and if we break February lows, where is the money going to be going? It's certainly not going into cryptocurrency. I'm watching that correlation every day. So as our best guess right now is it's going into these precious metals. But again, I have a feeling there's a lot of cash sitting in a lot of accounts, and we'll see if that cash is going to be waiting to buy the dip or if it's going to go elsewhere. So I appreciate you watching. We'll continue to check back in. Always be protective out there. If you get stuck in a trade and do not have stop losses when we have this kind of volatility, especially options, things can get ugly very quickly, and we never want to be in that kind of situation. Have a great night. We'll see you tomorrow.